All right, let's dive straight in. Today, we're digging into some potential stock trades. These popped up based on a recent market overview we saw.
Right. A video source, mainly, outlining a market perspective and, a couple of specific stock ideas.
Exactly. And the goal here, our mission for this deep dive, isn't just to repeat those ideas.
No, absolutely not. It's really to get under the hood, understand the why behind these potential trades.
Yeah, pull out those key insights, market trends, analysis techniques, stuff you can actually use.
Precisely. So you can build your own understanding.
Okay, so first things first, the big picture. What's the source's take on the global market?
Well, what's interesting is they're quite bullish, is the word they used. A bullish view on the world market overall.
Bullish. So expecting prices to generally head up.
That's the gist of it, yeah. A positive outlook globally. It makes you think about what assumptions are baked into that.
And zooming in a bit, what about the Indian market? Does that optimism carry over?
It seems to. The source describes the Indian market as being in an overall green zone.
Green zone. Okay, so widespread positive signs.
Yeah, suggesting positive momentum across, well, probably most of the key Indian indices at that point in time. It's quite a statement, that level of synchronicity.
Okay, so generally upbeat both globally and in India. Let's zero in then. The specific stocks. First one, Godrej Consumer Products. Godrej CP.
Right, Godrej CP. The analysis points to the stock being in a consolidation phase currently.
Consolidation, like trading sideways, taking a breather.
Exactly. And understanding these phases is important because they often come before a bigger move, up or down. The question is always what might trigger that move.
Right. So what's the potential trigger here, according to the source? When might you consider acting?
Well, this brings up discipline, doesn't it? They suggest if on Monday the stock shows an upside move and then sustains it, that could be the point to consider a 1250 call option.
Okay, wait for confirmation, don't jump the gun. And a 1250 call option, that's a bet on the price going up, essentially, giving you the right to buy at 1250.
That's right. The right, not the obligation. Offers leverage, but, options have their own complexities like time decay.
Sure. What if that upside move just doesn't happen?
Yeah.
Or it goes down?
Then, according to the source, and this is key risk management, no trade. Simple as that. If consolidation continues or it drops, stay out.
Wait for your setup. Makes sense.
It's about having those clear rules before you even think about putting money down.
Okay. And if the trade does get triggered, what's the target they're looking at?
The initial target mentioned is 1300. So that move from around the 1250 level towards 1300 is the potential they're eyeing.
Got it. 1300. But it's a projection, obviously.
Always. Markets do what they do.
And the source mentioned something absolutely vital about protecting yourself if you do take the trade.
Oh, absolutely. Non-negotiable, really. A strict stop loss. They emphasize that heavily.
Right. Setting that exit point beforehand.
Yeah, it takes the emotion out of it if things go south. Limits your potential loss to something you decided on when you were calm.
Crucial. Now, beyond just Godrej CP's chart, what else should someone be watching?
Good point. The source rightly says you need to be monitoring the broader market and keeping an eye on any news that might impact it.
So, context. A stock doesn't live in a bubble.
Never. Market sentiment, sector news, big economic events, it all plays a role.
And one last thing on Godrej CP. They mentioned something foundational.
Yes, sticking to a trading process, having a plan, following your rules for entry, exit, risk, not just trading on whims.
Treat it like a business, basically.
But that's a good way to put it, systematically.
Okay, let's switch gears. The second stock, HCL Tech. What's the technical picture there?
HCL Tech. Here they're talking about the potential formation of an inverse head and shoulders pattern.
Inverse head and shoulders. Okay, break that down a bit. That sounds complex.
It's a reversal pattern, often seen after a downtrend. You get a low left shoulder, then a lower low the head, then a higher low right shoulder. Connect the peaks between those lows. That's the neckline.
Right.
A convincing break above that neckline is seen by some traders as a signal that the downtrend might be reversing into an uptrend.
Okay, so it's about identifying a potential shift from selling pressure to buying pressure.
Potentially, yes. But like all patterns, you look for confirmation.
What's the confirmation or trigger here, according to this analysis?
The trigger they suggest watching for is a break of the previous day's high on Monday.
So a move above the most recent peak is validation.
That seems to be the idea, using that recent high as a confirmation point for the pattern's potential.
And risk management.
Yeah.
Same emphasis as with Godrej CP.
Absolutely. Again, the suggestion is initiating a trade only with strict stop plus, which I think we can safely assume means a strict stop loss.
Right. That consistency is noticeable.
It's a core principle they're highlighting, clearly, limiting the downside.
And the target for HCL Tech if this pattern plays out.
The target price mentioned in the analysis is $1,700.
1,700. Okay. Again, a target based on the technical setup.
Exactly. An anticipated move based on that pattern analysis.
Now, super important point. Before anyone listening even thinks about acting on these specific ideas, the source included a big disclaimer.
Yes, crucial. They explicitly state, and I'm quoting loosely here, look, I am not a SEBI registered advisor or research analyst, so please do your own analysis before initiating any trade.
Can't stress that enough. This isn't financial advice.
Not at all. It's information, it's analysis, but it's absolutely vital that you do your own homework, your own due diligence before making any trading decisions.
Your money, your responsibility. Simple as that.
It underscores critical thinking, doesn't it?
It does. So if we pull it all together, what are the sort of underlying trading principles shining through here?
Well, if you connect the dots, they flat out state their main goal is to minimize risk and increase profit.
The holy grail, right?
Well, the fundamental balancing act, anyway. Minimize risk, maximize potential profit. They're two sides of the same coin for any sustainable approach.
Okay, so recapping. We've looked at a bullish market view, both global and Indian, according to the source. We dissected two potential plays, Godrej CP in consolidation, looking for an upside break.
With a 1,300 target, strict stop loss.
And HCL Tech with that possible inverse head and shoulders pattern.
Triggering on a break of the prior day's high, aiming for 1,700, again, strict stop loss.
And underlying it all, the absolute need for stop losses, watching the market, having a process, and crucially,
doing your own research. Cannot be overstated.
Right. So these ideas seem to hinge on that positive sentiment, these specific technical patterns, and a real commitment to risk management.
That sums it up well. It's a combination of those factors.
Which leads us to a final thought for you, the listener. Considering how global trends can sway individual stocks, and knowing trading always has risks, what are some of your personal strategies? How do you stay informed, balance that hunt for potential reward with the absolute necessity of managing risk? Something to think about as you develop your own approach to navigating these markets.